We're sitting in a difficult situation right now. As investors, we have placed all our capital in the AI supercycle. Unfortunately, so far, we haven't been able to make money. The fund is flat for the year. At the same time, stocks that are actually participating in the AI supercycle, particularly CPU stocks, energy stocks, optical stocks, and connect stocks, like stocks that companies that are legacy companies actually that barely have any innovation. The main thing they are doing is just raise prices because there's a bottleneck on their front, on their end. They have been extremely outperforming us, in particular Nvidia and Tesla. And this is a very difficult situation to be in. As a fund, you have a theme and you're investing in the best players, and then everybody else is actually making all. That's not a good position to be in, to say the least. So we are at a situation right now where we're facing exactly that. So we have the AI supercycle, which is the ability to generate answers to problems, whether it's in a prompt or in an agentic workflow. So we have agentic workloads that are being executed in the cloud, and that requires a lot of energy, that requires a lot of memory, and that requires a lot of CPUs. It also requires a lot of GPUs, but the way the street is pricing the situation is that the GPUs have been priced, that Nvidia has enjoyed its run, and now everybody else is enjoying its run, and that's why we have, in particular, a massive rally in the CPU stocks like Intel, AMD, and ARM. Now, it is our bad that we missed this. I mean, that is, unfortunately, that is just the case. I mean, this is an unforced error because we've heard that at GTC. This was to be expected after the agentic workflows have hit sort of escape velocity. So people got excited about OpenClaw and then all the other stuff and the harnesses and all of that is it's workflows that need to be orchestrated, and that's why, in particular, CPUs are doing extremely well. So I'm going to focus in this episode about the CPUs and why they're outperforming GPUs and what NVIDIA is saying about this, and then what we expect will evolve in the next, let's say, 12 to 18 months. This is not even on podcast. It's May 22nd, 2026. This is Krim Delco. For the year, we are flat. The market is up 8%. We're underperforming by 8%. So let's first state the facts. What's going on in the market is that since the end of March, Intel has more than doubled, Qualcomm has doubled, and AMD has even more than doubled. So these stocks are doing extremely well because the demand for CPUs is through the roof. In the case of AMD, they're also co-selling their CPU solution with their GPU offering. So if you think about the chip world for the last 10 years, the CPU makers were trying to catch up with the GPU, with Nvidia, and now the tables have turned. Now the actual bottleneck is the CPU, and the market is at least dismissing for now the importance of GPUs. So that's kind of where we stand. That's why Nvidia is up only 15% for the year, and Intel is up under 30% and so forth. So that's what's going on in the market. Again, there's a bottleneck, and the reason the stocks are doing extremely well is, and by the way, there's a very interesting pattern also to be observed, which is you have legacy companies in the AI case. So that's the description by NVIDIA of the AI stack. So we have energy, we have chips, we have cloud providers, we have model providers, and we have application. So energy would be like GE Vernova, people like that. Then we have the chips like NVIDIA, CPUs like Intel, AMD. Then we have the cloud providers, the hyperscalers with Cursor, with crowds. We have CoreWeave, companies like that. Then we have the model companies like OpenAI, Anthropic, Grok, and then we have the applications, things like Cursor. Did I say Cursor? It's Crusoe. It's the infrastructure company. Cursor is the application company. We have, Grok Heavy or O-Codex, Anthropic, Claude, things like that. So in that case, what's interesting is the innovation here. This is definitely the horse carrying, moving very fast, and the carriage coming with it. So of course, the innovation is happening at the model level. The innovation is also happening at the chip level. So the chip level, which is Nvidia, has enabled the model explosion, right? The ability to actually do intelligence has been enabled by Nvidia and its, extreme co-design, and therefore Jensen's law, which is, 1,000x improvement in tokens per watt, tokens per dollar. So that has been the case for the last 3 years. Now the tables have turned. Right now, all the other parts of the stack, which are much slower innovation, are becoming the bottleneck. So the energy is the bottleneck. The parts of the chip, the CPUs, which have seen very low innovation to some extent also because they're just limited by physics. So they see low innovation, and what they're doing is raising prices, and the market loves it, and the demand is very strong. And we have this bonanza in these stocks. Now, for us as a fund, this is a very difficult situation to be flat this year when actually stocks in your stack that you should be investing in are up, have doubled. That is not a good situation to be in. Now, we refrain from investing in almost any legacy stock because we do have our mission is to generate wealth by investing in fundamentally new concepts and engineering practices. So just raising the price of a CPU or raising the price of a turbine or raising the price of your AWS session, that's not innovation. So we invest in Nvidia because there's an enormous amount of innovation in the company happening. And what Nvidia said on the earnings call regarding the turning of the tables from CPU to GPU and then back to CPU, what they said is that we actually have a problem now that the pipe is getting very, very narrow, or in other words, the amount of tokens that go through the pipe is much, much bigger than the pipe. And the bottleneck is the CPU. That's why the price is going through the roof. Nvidia has an answer to that, and that is Vera Rubin. Vera Rubin is parallelizing orchestration through speculative decoding. Now, this is not a technical podcast, but just think about it this way. Like you have in traditional generative AI, let's say, take the Rubik's Cube, which is a good analogy. When you solve the Rubik's Cube, you actually do one transaction at a time. You do this and this and this and this and this until you solve it. What speculative decoding is you have a large model which understands how to actually solve the Rubik's Cube, and then you have a smaller model which speculatively does not just one, but many, many steps ahead, and then checks with the large model whether, let's say, 8, 10, 20 steps, and this can be increased to 50, 100 steps. And there's, of course, an opportunity here also to accelerate the compute that way. So you have the ability now to speculatively guess the moves ahead and have a sequence of moves and then just check it against the large model. So that's roughly what speculative decoding is. Another way to say this is that we could have a situation where orchestration gets parallelized through speculative decoding. So that's the idea. So orchestration gets parallelized through speculative decoding. That's the answer that Vera Rubin is offering relative to the surge in CPU demand. Now, the question on our side, and this is sort of the third section of this discussion, the question is, do we stay invested in Nvidia? Can Nvidia continue to grow, let's say 50% plus? Because if that happens, the stock will do much better. Right now, it's priced at maybe roughly a 25% growth or something like that. And the answer is, we believe that there's a very good chance that the Vera Rubin platform will offer another massive scale up in performance specifically for agentic AI. And Jensen also spoke about the agents of agents. The way NVIDIA is thinking, and the reason you want to be investing in NVIDIA is the following. If you think that parallelization can be done at scale and help solve AI problems, Nvidia will do extremely well. If you think that that part of the equation is kind of diminishing and that we now have more traditional CPU type orchestration and parallelization is running out of steam, then Nvidia at least will underperform the others. Doesn't mean it's going to do worse. I mean, it's still up 15% for the year. It's better than the market, and our target return is 15% for the fund. So we're not desperate here. The reason we're down, the reason we're flat, excuse me, is because of Tesla. Tesla is down about 5% for the year. So to summarize, we believe that the answer that Nvidia is offering for this CPU inference / orchestration problem is parallelization of orchestration. Try many different moves for the Rubik's Cube at once and then check against the large model. This is roughly what Nvidia is trying to do. I think there's a good chance that the stock doubles this year. I was expecting actually this earnings call already, but I guess it's going to take Vera Rubin and the demand surge from that side for Nvidia to really outperform. And actually, if we put the facts together in the market, there's 3 facts that give us a lot of confidence. Fact number 1 is that AMD and Intel and these stocks really are only up because they're raising prices. That means there's not a lot of innovation. And that's always a good thing also for the company that is doing innovation, because that means that the gap is widening. Actually, this could be also a sort of a Trojan horse where companies like Intel, AMD, and so forth are even confident now that they're doing well, and they're going to, maybe step back on innovation where it actually matters, which is parallelization and driving down the cost per token. Second, we have a fact that people are not ready to pay the high token costs that Claude Code and similar models are demanding, and that shows that the pipe is getting too narrow for the tokens. So we need a bigger pipe, and Nvidia is going to offer that bigger pipe. We also have a fact that the Chinese don't want to buy anything other than Vera Rubin because they see that the future is in agentic AI, and Vera Rubin will offer solutions to current problems in that space. So to summarize, I would say this is a probability business. Nothing is certain, but there's a good chance that in the second half of the year, the demand for Vera Rubin and the pricing and the margins and the numbers in Nvidia will show that there is a lot more room for upside. I think we've always said that the risk to Nvidia is to the upside and not to the downside. And I think given that the orchestration can be parallelized, Nvidia is at the forefront of this endeavor, and the fact that the stock is relatively cheap to its potential, if that plays out, we think that Nvidia is still a very good investment. Thank you.